Alright, let me put you onto something. This gold setup is a perfect example of how smart traders think. Check this out, price just pulled into a 4-hour demand zone. Now, if you're new to trading, a demand zone is basically a spot where buyers previously showed real strength. When price returns to that area, we look for signs that buyers might defend it again. Simple concept, powerful results. But here's where it gets interesting. Gold isn't just touching any random level. It's sitting near the bottom of a major ascending channel. And in an uptrend, the lower boundary is where institutions love to accumulate. That's why this zone matters. Like, share and subscribe if you haven't. Now let's talk targets. Entry, 4054.40. TP1, 4100, first reaction point. Great for partials. TP2, 4150, previous swing high. TP3, 4227, a legit supply zone where sellers hit hard last time. TP4, 4300, the full channel move. That's your textbook execution target. Stop loss, 3941.21. And yes, we've got the stop loss tucked below the demand zone. Because if price breaks under that, the idea is invalid, and real traders know that discipline beats prediction every time. So remember this. Identify the zone, understand the structure, map out your targets, and manage your risk. That's how you trade with intention, not emotion. Thank you for watching and have a profitable week.